Yo, boy, do we have it. Welcome, and we're just going to get right into it. Today's price action MMXM review now because we don't see we don't see it in terms of chart review. We're seeing it in terms of MMXM review. And I'm bringing the heat. Every single MMXM review, I'm gonna go over literally every single thing that we had today in terms of MMXM. And then I'm going to have 5 back-tested examples every single day of MMXMs. So if you want to get better at MXMs and you want to get better with me, then this is your chance. Yo, it's good on site. And as always, like if you have any MMXMs you see or you guys want me to, or you guys want to break down as well, like feel free to say something in my Discord or say something in the Discord. All right. So let's just get the charts lined up here. And my charts are a little bit of a mess right now, but as you guys can see, we're gonna go over it because I do think that price action was very, like, looking back, it was pretty clean. I'm not gonna lie. Looking back, it was pretty clean. But in the morning on NQ, I was bearish, and here, let's see if I can get rid of the drawings. I don't want to delete them all, but as you see it here on NQ, we have taken these highs here. So anytime we take highs, we're going to go from external range liquidity back into internal range liquidity. So if we zoom out to the 4-hour, we just took buy stops. What are we going to go from external range liquidity back into internal range liquidity? Notice as well that we also did come within a daily fair value gap. So this could be on the daily time frame. For us, come within internal range liquidity back down to external range liquidity, we'll kind of get within that bias. But that's how the market moves. Internal range liquidity to external range liquidity. We're always shifting from imbalances to sell stops or buy stops. And that's what we're doing. We're going from buy stops to now imbalances. Or we kind of did peak within that daily imbalance. So we're going from imbalance to sell stops. But it really doesn't need to be that complicated. Like, yeah, you might see different things than I see, but yeah. And I really want to go over this before we go into anything. I feared this would happen. It messed up my drawing. Good thing that that's not a pretty drawing at all. But basically, what I want to go over is that this is what the higher time frame looked like today. This is what the higher time frame looked like today. In order to understand the lower time frames, we have to know what the higher time frame is doing. So the higher time frame is expanding lower, and then we're pulling back, we're retracing, and then we are expanding. That's pretty much what we did today. And what does that look like on the lower time frame? Just take a little schematic. We'll have original consolidation. We'll then have a smart money reversal to trade away from, to then have a, I don't like this at all, but this is what happened today just by my schematic and how I drew it out. So we'll get right into the action that we had without further ado. So this is actually very clean action. I'm not gonna lie. Like, as you guys can see, I have a lot going on here. So sorry, I don't need that. Wait, I have a lot. Oh, I need that actually. I have a lot going on here, but everything makes sense and everything ties in together. So, as we can see here, in the first 30 minutes of price, what do we do here? What is this? We draw into the daily fair value gap. Let's look at hindsight, and let's look at the daily candle that formed today. It was a... Wait. Am I weakened? It was a doji candle. Wait. No, it wasn't. Dude, I'm tripping. Sorry. I think I'm getting nervous because I want this to be a good lesson, but I'm choking. That's all right. So basically, we're coming back. We're drawing within this fair value gap. Smart money is inducing buyers in the market. We're now tripping buy stops here. People see this as breakout. We're now taking external range liquidity in form of lines, Anytime we take external range liquidity, where do you think we head to? Internal range liquidity. Yes, internal range liquidity. So external range liquidity was the draw here. And anytime we move from external range liquidity, where are we going? Internal range liquidity. Simple as that. Even on ES, we were taking external range liquidity. So I was anticipating a run back into internal range liquidity. What does that look like? This 4-hour fair value gap, that was my target for the day, and that's what price ended up doing, coming back into this 4-hour fair value gap. We go from external range liquidity to internal range liquidity. It's as simple as that. Whenever you have buy side or sell side of the curve, we're either going from a line to an imbalance or from an imbalance to a line. That's all we're doing. We're just recycling and rinsing and repeating what we're doing. Just break it down. Make it simple as that. Line to a box to a line. That's all we're doing. That is all the market moves. That's how the market moves. On the higher time frame, that's how we move. But if we zoom in, if we break it down lower into the lower time frames, that's when you're going to get your market maker models, because every higher time frame retracement is a market maker model, and today's action proves that. We then come in here, and then we have an SMT at the highs. I'm just going to mark it out from this high to this high for, actually, I'm not going to do that. But we end up having an SMT after taking buy side. What is this? This is your smart money reversal for us to then have displacement lower, for us to then have a low risk entry. Pull back to OTE of that. I'm going to mark this out. So I should have this ready for y'all, but I don't want to have too much stuff on my chart. And then if we look at to the left of us, we have all of this low resistance liquidity. All of this is low resistance liquidity. Low resistance liquidity to the left of us. We know this is just way too clean for us to come back into. The fact that we have that forming we have an imbalance to the lower of us. So that's what I was looking for. And I never executed today. I didn't take any trades, but looking back, this is why these are good. So we end up having that smart money reversal. This is where smart money is truly getting involved within the wicks of the higher time frame candles. We're getting involved here. And then we have displacement lower. We now have this internal consolidation. We're going from external range liquidity here to internal range liquidity. Simple as that. Simple as that. We end up having this displacement lower. You have your low risk entry. Where is your low risk entry going to line up with? 0.25 to 0 of this measuring of this swing grade. 0.25 is where we want to see our low risk entry. What do we expect to see at 0.5? Consolidation around this area. And then if we get displacement through 0.5, we expect for sell side to be the target. And notice how this low down here was the target. Wait, I didn't even look at any of the Asia. No, that was yesterday's PM. That was yesterday's low. Or no, that was yesterday's PM session low, not yesterday's low of day. Basically, we have low risk entry, first stage of distribution, second stage of redistribution, and then we end up coming back down. And look at how precise this standard deviation projection was. Look how pretty much precise it was. Like, yeah, we kind of went down here, but for like, we respected this -4, and this -4 lined up perfectly with sell side. So that's why I like this standard deviation. Standard deviation is just the last manipulation, like upwards. So I'm gonna frame it from here to here, because you could frame it from here to here, and you technically would be right to frame it from here to here. But this move really started this whole leg. So that's how I'm gonna grade it. And look at where -4 lines up perfectly. Ideally, you want to see -2 to 2.5 line up with sell side, which is exactly what we did. And then -4, you want to see it line up with sell side as well. And that's exactly what happened today. So this would have been a good model. This was a good model. We're going from external range liquidity into internal range liquidity to then have low risk entry, first stage of distribution, second stage of redistribution. This now becomes your silver bullets into sell side. All right. So that was the first model. Where could you have entered here? You could have entered here off of this breaker here. We have a breaker. We also kind of have Very tiny imbalance here. I'm not going to really count it, but I think this is a 5-minute imbalance. We zoom out. Yeah, we have a 5-minute imbalance there. You could have entered there, put your stop at that high because we have an SMT at the high, and then you could have rode this all the way down. Could have also just taken this entry, or you could have waited. You want to see more confirmation. All right, we come back down, then we get a retracement, and this right here is a redelivered, rebalanced PD array. This is what that is. So notice how this would normally be a fair value gap. This would normally be a fair value gap, but this wick offers sell side in here. This is actually a PD array. This is a PD array. You would treat this like a fair value gap, and you would treat it just as powerful as a fair value gap. Notice up here how we have a breakaway gap, which I don't really like, but I don't really use breakaway gaps. But notice how price reverts to this, then we end up selling off, and then we come back in. This is the 5-minute fair value gap, and then we head back lower. This could have been your second stage of redistribution. You don't always have to be in on these stages up here. Like ICT said, the second stage of redistribution or reaccumulation is the most powerful component, or it's the most steady, because like that's how you know the model's valid. So second stage of redistribution, and that ended up working out very nicely. And okay, so that could have been the first model. We had a first nice little market maker sell model, and then we go from external range liquidity. We take lows down here. Where do you think we're gonna go back to? We have a 1-hour fair value gap that now just opened up. Let me clean the chart. We now have a 1-hour fair value gap. Where do you think price is gonna draw back into? We've now taken external range liquidity, so we're now going to head back into internal range liquidity. So let's see exactly what this looks like on the lower time frame. So we have now taken sell side here, and we now have an SMT at the lows here. ES has taken this low all the way down here. So we have an SMT at the lows here, and then I'm not going to mark that one out. And then we end up having another internal SMT. So this now becomes your manipulation move, and then you can map out that projection. And notice 2.5 lines up perfectly, or it lines up pretty well with buy side, and also lines up pretty well with this SIBI, which is also what I liked. Okay, we have that smart money reversal shown by the SMT, to then have displacement higher, to then have your low risk entry, to then have your first stage, to then have maybe your second stage. You're not always going to get first stage and second stage, but I really like this. Where could you have entered in off of this? You have your smart money reversal, low risk entry, or technically your low risk entry is down here because that SMT signifies that low risk entry, but I would say this is first stage and then second stage. We'll just call it that. And then where do we reaccumulate? -1 to -1.5. Where do we put a top in? -2 to -2.5. Look at the standard deviation. Look where the standard deviation lines up. Anytime we hit -2 to 2.5, we're looking for a possible reversal, and that's what ends up happening. A reversal or a retracement. Notice where I'm framing these two legs. This is that last manipulation move to have that move lower, and this is that manipulation move as well. These are both manipulation moves. And then we end up having first stage, second stage. Where could you have been active in on this? I personally was looking to take an entry here. I was really looking for this. We have a mitigation block, or we have a breaker block in line with a fair value gap, in line with an order block. Anytime we have a breaker block, we have an order block from the left side of the curve, and then we have a fair value gap, and then we have an order block on the right side of the curve. That is the most powerful PD array. Those three PD arrays are very powerful, and we're likely going to respect that. And look what we end up doing. We end up taking buy side. Notice how this is a internal market maker buy model we had here. What are we doing on the way lower? We are generating liquidity. We have swing highs that we're putting in that we are not taking. We are generating liquidity to then have a smart money reversal, to then have displacement higher, to then have a low risk entry here, to then have a first stage of distribution, to then have, or accumulation, to then have a second stage of redistribution. Very nice, very nice. And if we map out this standard deviation, Where does -2 to 2.5 line up with? Right where we reverse from. And where else are we reversing from? We have this 15-minute bearish for value gap. I think it's cleaner on ES. I think ES was nicer. Yeah, on ES we end up coming back within this fit. Oh no. It was this like here. We had SMT at the highs. That is why we reversed. We had SMT at the highs, and we also are within that standard deviation projection. So standard deviation projection. Then we have an SMT at the highs. We're likely gonna reverse here. So we end up having a smart money reversal to then have first stage of to then have your low risk entry, to then have first stage of reaccumulation or accumulation, to have second stage of reaccumulation. Where are you possibly looking to enter? For me, I like mapping out the left side, bringing back these old order blocks, previous order blocks. Notice how this previous order block lines up perfectly with this fair value gap. That would be your best possible sell. That would have been your kind of unicorn model here. That would have been a very powerful entry. You would have entered here, and you could have put your stop at the high here, and then rode this to sell side. Notice here as well how well standard deviation kind of lines up. I know it's not like to the tick, but you're not always going to get standard deviation projections that line up to the tick. But when they do, you know that you did something right, or you know that the market just booked very efficiently. But here we have smart money reversal, low risk entry, first stage of distribution, or distribution because we're in a sell model. Then second stage of redistribution. We end up taking external range liquidity, and where do we end up going back to? Where do we end up going back to? We take external range liquidity. Where do we go back to? Internal range liquidity. It's as simple as that, and that's exactly what we did today. And today was very clean for that reason. So we're going back in internal range liquidity to then have a smart money reversal. To then have a I really thought there was only one entry here, but notice why do we do this? Notice all this liquidity that we have here that's just been stacking up over here. We have all this stacked liquidity. We have stacked liquidity here. So all of this now becomes low resistance. That's exactly what you want to see when you're bearish. You want to see low resistance liquidity. When we end up running that, do we actually do that after close? We end up doing that after close. So this was kind of earnings. I'm pretty sure this had to do with earnings. I know some companies had earnings today, so that's why that happened. So this was mainly due with earnings. So you wouldn't necessarily expect to see this happen, but I guess you could kind of see it happening. Earnings, in my opinion, I don't know. I don't have too much experience, but internal range liquidity into external range liquidity. Notice what the market was doing. We go from external range liquidity into internal range liquidity, and then we kind of just book from internal range liquidity to external range liquidity. Then we go from external range liquidity to internal range liquidity. Then we go from internal range liquidity to external range liquidity. Then we go to external range liquidity to internal range liquidity. Then we go to internal range. Like, we're constantly always doing that. Entered right at 3:49 p.m. because of SMT with the S. Yeah, I think I saw that in the Discord. I don't know. This is because of earnings. Who had the earnings today? Brother, it's almost 1 a.m. I'm in U.S. time. It's like 4:50 my time. So it's like 4:50 my time. But it's almost 1 a.m. for you. Meta had their earnings today. I'm guessing Meta did not perform well. Let's search up Meta. What did Meta do? Yeah, anytime you have earnings, yeah, look at that, minus 15%. I was kind of expecting this, honestly. Like, I'm not gonna lie, earnings. Like, I never said this, but I was thinking it. But I was bullish on Tesla earnings, and then I was bearish on Meta earnings. Honestly, like, it just makes sense. It just makes sense in my brain. Or maybe I just got getting lucky, and I'm just thinking that I'm doing something. All right, and now what I want to do is I want to go over 5 back-tested examples. We're going to do this every single day. We're going to go over the market maker models that we had today on NQ and ES, and then we're going to go over 5 back-tested examples every single day. So this is a market maker model. To give you kind of some context, we have SMT at the highs. If you guys want to pause the video here, if you guys want to go over, you guys want to look at your annotations before I go over my annotations, then I would recommend you do that. This is a time for you to lock in. So again, I'm going to put this up one last time. If you want to annotate this, feel free to do so. So this is how I annotated it. This is how I annotate it. So we have SMT at the highs, then we get displacement lower. This could be your low risk entry here, off this inverse fair value gap here. For me, it's just a little bit too early. But notice how within the swing grade, 0 to 0.25, that's when you're going to get your low risk entry. Then you notice here, we're talking about the swing grade right now. We get displacement through 0.5, so we're confident that we're going to hit our draw on liquidity. Also notice how standard deviation lines up perfectly -4. Notice what ends up happening. We end up respecting -2 to 2.5. Where do we end up going? Back within equilibrium of this price leg to then have that second leg lower. Right here, we have old selling. This is a very strong, powerful PD array. Notice if you can align this with a fair value gap, that is going to be your best entry. That's going to be my preferred entries from now on, honestly. But just by looking at these market maker models and study these. Anytime you have old selling on the left side, you can map that back out. Like this order block will now be used the same way it would be on the right side, where it would just be inverse. Because where smart money bought here, they're going to mitigate their positions here. So look exactly how well we respected that. We have SMT at highs and having displacement lower, -2 to 2.5 respected, coming back within equilibrium of that price leg. This is where you have your first phase of distribution. To then, this now becomes your intermediate term high because we are rebalancing to an imbalance. Now we have a short-term high to the right of it. That's now confirmed as your intermediate term high. This now becomes your silver bullet, your second phase of distribution. You want to see that line up with 0.5 to 0.75, and that's what we end up doing. So we have silver bullet here, second stage of redistribution here, first phase of distribution here. Low risk entry here on that inverse fair value gap. For me, it's a little bit too early, but that would be near low risk entry. SMT at the highs, old selling here, that would be your best entry. Stop at that high, targeting those lows. And what I also want to point out is, like, you guys have no context to this. So, but there was just low resistance liquidity, and notice why we call it low resistance liquidity. Low resistance liquidity, that's on the higher time frame. All right. Here's another example. Again, if you want to stop and pause the video, this is a higher time frame imbalance that we're bouncing off of, so that's just some context. And we have SMT at the highs. If you want to stop now, feel free before I go over my annotations of this chart. As you can see right here, we have that standard deviation. We have that manipulation move. Notice -2 to 1.5 isn't perfectly aligned with sell side, but it's pretty close to sell side. Notice how we have displacement lower. And look at this mitigation. Look at the order block here. Even here, I didn't map this out, but just by looking at this, we can eyeball it. Look at this mitigation block over here. Look at how well I got that respected. Look at how well that respected. We then have an OTE retracement to where we retrace back into OTE of this price leg, back within this fair value gap, also back within this mitigation. That's what I really want to draw your eye to. Looking over here, we have an original consolidation. It's been your first stage of distribution. Low risk entry up here to then have that silver bullet after that intermediate term high confirmed. Intermediate term high, to the right of that is your silver bullet. Notice how here, with the swing grades, 0 to 0.25, where are we expecting? We're expecting that low risk entry. Once we get displacement through 0.5, we're expecting this to now form silver bullet, and we're expecting this to now confidently be the draw. So this now becomes a draw, and then this is internal range liquidity to external range liquidity. We're going from a place of internal range liquidity to external range liquidity. That's all we're doing. And anytime we have a higher time frame retracement into internal range liquidity, on the lower time frame, that's going to be mapped out a market maker sell model. Look at order flow here. You know, having that smart money reversal. Why is the smart money reversal valid? Because it's an area in which we expect to reject. It's an area in which we expect order flow to get shifted. Right here, we have that market structure shift. Order flow now shifts bearish. So now, every down close candle we expect to respect. Notice here, we have that breaker aligned with that order block. That now becomes very high confluence. Notice how we respect that. And then we come back up. We have a retracement. Oh, price is reversing. We're going to go back up. Nope, just OTE. Come back up into OTE. And then we have displacement lower. Silver bullet here. So then sell off lower. That was a good example. All right. This example, again, if you want to take the time, this is a 15-minute fair value gap, 15-minute BPR right here that we're rejecting off of. Also have SMT at the lows. I'll give you some context so you're not just blinded by a sheep. Blinded by a sheep? Why did I just say that? Blinded like a sheep. No shot. I guess I didn't get that chart annotated. I thought I did. But anyways, this is notice how efficient price runs here. That's because we have the SMT. That's all I was probably going to annotate. Alright. Another one. If you want to pause. And if you want to go over this before I annotate it, feel free to do so. I don't even know how you would. It's not like you could log on to TradingView. We're just training the eyes here. Why did I not? Okay, we sweep internal range liquidity. We then have displacement up. We then have that market structure shift up here. Order flow is now bullish. Then have first stage of distribution to then have second stage of reaccumulation. First stage of accumulation, second stage of reaccumulation. Lower risk entry here. Generated liquidity on the way lower. This honestly isn't the best example, but it is a market maker model. Okay, this is the last one, and then I also have a bonus one. If you want to annotate it, feel free to do so. I really do like this one. Right here, we have that smart money reversal. We have an SMT at the lows here. I didn't map out the SMT, but we have an SMT at the lows here. So this now becomes your low risk entry. We now have generated buy side. Notice, look at this, look at this. Generated liquidity here. Generated liquidity, stacked trendline liquidity. Failure swings, failure swings. This is low resistance. Come in, we have that first, we have that low risk entry to then get bought up, to then have first stage, to then have second stage. Look at the breaker here. We map out that breaker. It aligns with that fair value gap. That's where you really want to get involved. Notice how, as well, if we map out this in time, I didn't map it out, but if you map that out in time, well, where does that align perfectly with? This low right here. Notice how this low is aligned perfectly with this mitigation block, this breaker block. We end up getting bought up to buy side. We end up completing buy side of the curve. And notice where we end up reversing. -2 to 2.5 perfectly. We then head back in equilibrium to then probably have another expansion higher. So yeah, those were the 5 market maker models I brought to the table today, and we're gonna do this every single day. And here's just a bonus chart if you want to annotate that, or if you want to just get practice to see market maker models. But yeah, every single day we're gonna have market maker models, market maker model review, market maker model eye training, market maker model fitness, and I don't know. I definitely just want to become better at like communicating and better at communicating, especially market maker models. And I'm only gonna get better at that the more we see it, the more that we get better. Like you gotta start somewhere. You really gotta start somewhere. And that's I'm not expecting anything like fantastic within the first like 100 sessions, but after those 100 sessions are over, like bro, we're gonna be beasts. We're gonna be insane. We're gonna be crazy. We're gonna be great. So I'm kind of gonna delete. Yeah, I'm gonna delete all this. And we're gonna go over what the bias is for tomorrow. So we have now taken external range liquidity and we have gone into internal range liquidity. So we have these 4-hour fair value gaps. We also have, we also have these order blocks here to maybe possibly support price. So I want to see how we react off these 4-hour order blocks, if we're going to hold these areas or not. Let's zoom out on NQ as well. Here, I'm just going to remove drawings. We're now taking external range liquidity. We're now mapping back down to internal range liquidity. I want to see how these order blocks get, if we respect these order blocks. But right now, I'm in a place to where I don't know yet. Like, this could possibly be midweek reversal to where we come within this fair value gap and then we want to book back down to these lows down here. But I'm still kind of bullish. I want the draw to still be this market maker model on NQ. I want the draw to be these relative equal highs. Like, I still think that this area up here just looks way too clean. And I want NQ to draw back within this daily fair value gap. We don't necessarily have to, but just by the look at this, that's what I'm expecting, and that's what I kind of want to see. But right now, we're respecting bullish order flow. We then had SMT in an area which we could expect to reject. Notice we had market structure shift here. So I want to see, is this just a retracement here? Is this just a retracement? Are we going to respect order flow down here? Are we going to respect these 4-hour fair value gaps, this 4-hour order block? This is really what my eyes on. My eyes really is with on this 4-hour order block. We also have a 4-hour inverse fair value gap here, down here. Which I'm not really going to map out too much. I'm not really going to map out that too much. My eyes are mainly on this order block, which we're keying off right now. So this is what I'm looking at. Obviously, we could have a draw on liquidity that's lower down here. But I'm not anticipating this to be the draw on liquidity yet until we start to displace lower. But I think that this could just be a pullback to then have buy side of the curve here. To now go from internal range liquidity to external range liquidity, to go from internal range liquidity back to external range liquidity. So this is what I'm looking at. This is what I want to see. This would be ideal for the market maker model on the higher time frame. This is what I'm looking at. This is what I'm anticipating. This is what I want to see. So we'll see what happens. Oh, what's good, Owen? How you doing? You just joined. Missed the first 20. Was at dinner. No worries. The only thing that's making me bearish is that ES is already tapped in the daily fair value gap. Yeah. ES has tapped within its daily fair value gap, and I'm pretty sure YM has as well. I'm gonna remove these drawings. ES is tapped within this fair value gap. Ideally, I would like to see. I don't know how we hit equilibrium. We haven't hit equilibrium of this range yet. And notice as well. I was saying this in the live stream today. Notice how barely we tapped this fair value gap. I'm expecting us to come back within that fair value gap to then possibly soup this high. So anytime we have a daily, even that's not a good example. I mean, I guess here it kind of is. Notice how we barely come within this daily fair value gap, and then we actually come within that fair value gap. I'm trying to see if there's a better example. I think if I pull up NQ1, it'll probably be a little bit cleaner. There might be some better examples to kind of we barely came within that fair value gap. So I'm expecting that to get raided. I'm expecting that to be a potential area for us to raid. That's what I'm looking at. Let's look at DXY. I want to see DXY. What is DXY doing? Right now, for DXY, this looks pretty bullish as well. I wanted the draw to be this daily fair value gap, like I was saying. Oh, I had my drawing. That makes sense. We kind of have taken liquidity here. DXY looks like we could be bullish, but I'm kind of anticipating some chop here. I'm anticipating some structure. So it more depends on what we do in the overnight session. That's really gonna that's really gonna map out a lot more of my bias of what we do in the overnight session. So that's really what I'm looking forward to is the overnight session. I want to see what happens during that overnight session. But I'm really looking at these order blocks here. I want to see, are we respecting this? Are we disrespecting this? I'm really looking at this fair value gap. This is really gonna maintain my bias. Is this 4 hour fair value gap? Okay, we now gone from external range liquidity to internal range liquidity. Are we gonna go from internal range liquidity back into external range liquidity? Or are we going to go from this all the way down to these lows? Which on ES, it looks a lot more bearish. I'm not going to lie. But we have had that market structure shift on the 1 hour. So something to keep in mind of. Other than that, I really don't have anything else. Today's price action was very clean. I kind of do think I overcomplicated a little bit. I think I did. I want to become a better, like, be able to visualize it a little bit better. But today's price action was very clean. Market maker model inside a market maker model, market maker model, market maker model, market maker model. Very clean, very nice, very good price action. Tomorrow we have 8:30 and 10 news. We have 8:30 news and then we have 10 a.m. news. So with that being said, should be a good volatile day and we should see some good action, hopefully. So yeah, I don't got anything else. I appreciate you guys for watching. I appreciate you guys for watching this far, like I really do. I'll catch you guys in the next one, and